Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 5 strong buy dividend stocks for February. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. The first month of 2025 is complete and February is here. So that means it's time to look at some dividend stocks that have ex-dividend dates coming up this month. That ex-dividend date is the day you must own a stock before in order to be eligible for their next dividend payment. So with those dates coming up in the next few weeks, it means you won't have to wait long to start collecting that sweet passive income. On top of that, all of our stocks today do come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and of course how the Wall Street analysts weigh in. We found today's stocks on the TipRanks dividend calendar. You can find this either under the calendar menu here or under dividends under dividend calendar at the bottom, and you'll find a list of all companies and their upcoming ex-dividend dates. You can sort by week here up at the top, and then down below apply other filters such as market cap, sector, and analyst consensus. Today we narrowed in on strong buys. Just before we get into these stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can check out these stocks for yourself over on the TipRanks website or right on the TipRanks mobile app. Links to download are in the description down below. Now let's jump right into our 5 strong buy dividend stocks for February. First up is MetLife. They trade under the ticker MET, currently priced just shy of $87 per share. They've climbed 37% in the past year and in the last 3 months are up over 11%. MetLife is one of the largest global providers of insurance and financial services to customers and institutional companies. They aim to help individuals and businesses secure their financial futures by offering products that protect against various life events and financial risks, support retirement planning, and enhance employee benefit packages. They combine traditional insurance with modern financial services to meet diverse needs. Their ex-dividend date is coming up soon on February 4th. With a current quarterly dividend of 54.5 cents per share, their ex-dividend date of February 4th will mean a payment date of March 11th and a dividend yield of about 2.5% and a healthy payout ratio at 27%. And one day after that, on February 5th, they'll be sharing their 4th quarter earnings report. This does follow some mixed results for their 3rd quarter back the end of October. For their Q4, analysts are anticipating earnings per share of $2.12, which would be an increase over last year's. For their 3rd quarter, they reported earnings per share of $1.95, falling 22 cents short of analysts' expectations. Revenue, however, came in at $18.44 billion, which did beat estimates by $70 million and grew 16% year over year. With 11 current analyst ratings, the MetLife stock does come in as a strong buy with 10 buys and 1 hold. And the average price target is $97.36 for an upside potential of over 12%. Looking at those ratings down below, on the low end, we do have a buy rating here at $88 for a slight upside of 1.5%, while our high-end price target is $104 for an upside of nearly 20%. Number 2 on our list is a stock I've definitely covered several times over the last couple of years now probably. It's one of my favorites when we're looking at solid dividend companies. That is Energy Transfer. They trade under the ticker ET, currently priced just above $20 per share. The stock has climbed 55% over the past year, and in the last 3 months is up nearly 28%. Energy Transfer is primarily involved in the midstream segment of the energy industry. They own and operate one of the largest and most diversified portfolios of energy assets in the United States, including a vast network of natural gas liquids, refined products, and crude oil pipelines. They have significant storage capacity for natural gas and crude oil, which supports their transportation services and helps balance supply and demand across different regions. Their ex-dividend date is coming up on February 7th. They increased their quarterly dividend by over 3% to about 33 cents per share for a yield of over 6%. That ex-dividend date of February 7th will mean payment date on February 19th. They'll be sharing their 4th quarter earnings report on February 11th, and this does follow an earnings and revenue miss for their Q3, but they did see some record EBITDA and volume growth during that quarter. For their 4th quarter, analysts are anticipating 37 cents per share, which would be flat compared to last year's. For their Q3, they reported earnings per share of 32 cents, falling 1 cent short of analysts' expectations, and revenue of $20.77 billion, missed by $820 million. During the quarter, they did see record volume and EBITDA growth and strong performance in their midstream segment. Over the last several weeks, we've had quite a few analysts increasing their price targets on the stock, and right now Energy Transfer has 10 current ratings, coming in as a strong buy with 9 buys and 1 hold. The average price target comes in at $22.33, implying an upside potential of 8.4%. Looking at those price targets down below, you can see how many of them have been bumping up those price targets. The low end, we do have a hold and a buy both at $20, which would now be a downside of nearly 3%, while our high-end price target comes in at $25 for an upside of over 21%. For our third stock today, we have another energy company with Sunoco. They trade under the ticker SUN, or SUN, currently priced at $57 per share. They did have some struggles at the start of the year and are up just 2.5% overall, but in the last 3 months have been gaining and has climbed 14.5%. Sunoco manages and distributes fuel products. They are one of the largest independent fuel distributors in the U.S., supplying gasoline, diesel, and other fuel types across 40 states and territories. They have retail operations with their retail fuel sites and convenience stores, as well as midstream operations, owning and operating a network of pipelines and terminals for the transportation, storage, and distribution of different oil products. And a fun fact is last summer, Sunoco and Energy Transfer announced a new joint venture for a strategic investment in the Permian Basin. And Sunoco's ex-dividend date is also on February 7th. And they just slightly increased their current quarterly dividend to over 88 cents per share. That ex-dividend date of February 7th will mean a payment date of February 19th and gets them a yield also just over 6%. For 2025, they're targeting a distribution growth rate of at least 5%. And they'll also be sharing their fourth quarter earnings report on February 11th. This does follow a miss for their third quarter back in October. For that fourth quarter, analysts are anticipating earnings per share of $1.45, which would be a big swing from last year's. For their third quarter, they did report a loss per share of 26 cents, which was not quite comparable with estimates, while revenue came in at $5.75 billion, missing by $760 million. However, there were some highlights in the quarter, as they had record third quarter adjusted EBITDA and strong distributable cash flow. The Sunoco stock does just have 4 current analyst ratings, but does come in as a strong buy with 3 buys and 1 hold. The average price target of $61.33 implies an upside potential of 6.7%. Looking at those ratings down below, on the low end we do have a buy at $59 for an upside of under 3%, while our high end comes from RBC at $64 for an upside of over 11%. For our fourth dividend stock, we're switching industries and looking at Nomad Foods. They trade under the ticker NOMD, currently priced at $17.81. They have seen some ups and downs this past year and are down nearly 1% overall, but are up about 1.8% in the last 3 months. Nomad Foods is a leading frozen food producer primarily focused on European markets. They produce a variety of frozen food products, including fish, vegetables, poultry, ready meals, and plant-based alternatives. Their portfolio includes iconic brands like Birdseye, Findus, Igloo, Aunt Bessie's, and Goodfellas. Their products are distributed across supermarkets and large chain food retailers in 13 European countries. Nomad Foods recently increased their quarterly dividend by 13%, and their ex-dividend date is on February 10th. Their new quarterly dividend comes in at 17 cents per share, and this was their first dividend increase since initiating their dividends, which started just last year. The dividend will be payable on February 26th after that ex-dividend date of February 10th and gives them a yield of about 3.4%. Their fourth quarter report comes out near the end of the month on February 27th and does follow an earnings and revenue beat for their third quarter, where they also saw record gross margins. For their third quarter, they reported earnings per share of 57 cents, beating analyst estimates by 4 cents per share, while revenue came in at $753 million, growing nearly 1% year over year. Their stock has 4 current analyst ratings and comes in as a unanimous strong buy. And the average price target is $22.50 for an upside potential of 26%. Looking at those price targets down below, our low end is $19 for an upside of 6.6%, while we have 2 at our high end of $24 for an upside of over 34%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Veritex. They trade under the ticker VBTX, currently priced just shy of $27 per share. Their stock has climbed 36% overall in the past year, cooling off a bit here in recent months, fairly flat. Veritex operates Veritex Community Bank, offering commercial banking services primarily to small and medium-sized businesses. Based in Texas, they operate with a community-centric approach, offering personal and business banking products such as checking, savings, money market, and time accounts. They also have loan products including commercial real estate, general commercial financing, and residential real estate as well. Their ex-dividend date will be on Valentine's, February 14th. And their current quarterly dividend comes in at 20 cents per share for a dividend yield of about 3%. That ex-dividend date of February 14th will mean payment on February 28th. And they just shared their fourth quarter earnings report on January 28th, where they did fall short of analyst expectations. Their earnings per share of 45 cents fell 10 cents short of analyst expectations. Revenue came in at $106.2 million, missing by $6 million, but did grow 36% year over year. And all of our analyst ratings came in after that earnings report. There are currently 5, and it comes in as a strong buy with 4 buy ratings and 1 hold. And despite missing expectations, analysts seem bullish as the average price target of nearly $33 would imply an upside potential of 23%. Looking at those price targets down below, our low-end price target is $31 for an upside of nearly 16%, while our high-end price target is $35 for an upside of over 30%. So that is a quick look at 5 strong buy dividend stocks, all with ex-dividend dates in the month of February. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.